Let the kids grow up within the business and let them be part of it. That's powerful. They're not going to become spoiled and entitled.
Starting with your mindset is like really the first step. Like you have to think, you have to believe that you can go out and do these things, and you have to like have that positive attitude of like, we're going to do this.
Making money is great. What do you do with that money? How do you make money and how do you make impact? I think that's what we as all business owners should have on our mind. I want people to make as much money as they possibly can. We need to be financially independent, because if you're not, then you really truly can't go out there and help others if you can't even help yourself.
What's going on, guys? Thank you so much for listening to another episode of the Commercial Real Estate Blueprint Podcast. I'm very, very excited today for our guest. It's Gino Barbaro. He is, you probably have know this guy from Jake and Gino, really cool partnership they have with multifamily assets. I was telling Gino before we started recording, I listened to him. I can't remember if it was 9 years ago with that first episode you were talking about. It might have been. It's been a very, very long time. I've been in real estate for almost 8 years now. So it could have been that one. It could have been maybe the second time you're on, but I really liked that episode. And when your assistant reached out to come on the show, I was like, man, this is awesome. So we have Gino here. He's got a new company he's working on called, you said it, tell me the name one more time.
Called Barbero360. And I just want to give you two a shout out. It is January 2nd, the day after New Year's, and most people have checked it in. Most people are tired. The year hasn't started yet. So big kudos for having me on today. I appreciate you guys taking the time to record the show on a day when most everyone else is out to lunch.
Yeah, thank you. We appreciate that shout out. We actually had one this morning and then one today. So we're trying to get the pipeline back up for the podcast, but and get after it in 2026. But yeah, so for people who aren't familiar with you and haven't heard you on podcasts and stuff, give us a little bit of your background.
Well, I'm going to give a big shout out to the title of the podcast. The last word that you have there is called blueprint. And I don't think people understand how important a blueprint or a map or a process is to whatever you're trying to accomplish. You want to have a healthy family, you need to have a blueprint or a process. When I started in real estate, it's because I was in the restaurant business for years with my family. I loved it until I didn't. And I was investing without a blueprint, without a map, without a process. And sometimes you get lucky, most times you don't. But there's the word luck. And the other mistake that I made was that I didn't look at real estate as a business. And that truly came back to haunt me, because I started buying these different deals in these different niches, and I didn't understand that there was processes, frameworks. When I met my business partner, Jake, in 2009, he was a pharmaceutical rep taking orders out of my restaurant, going to doctors' offices and selling, vaccines and drugs, legal drugs. That's what he would call them. And it was interesting. He hated what he was doing, and I needed to change. I had 4 kids at the time. I'm like, I am not going to be paying the bills and growing wealth with this job, because it was a job. And I realized all the mistakes that I made when Jake and I partnered up in 2011. It took us 18 months to find that very first deal. But after we did, we were at least smart enough to understand, wow, there's a framework in this real estate business like everything else. We had called it buy right, manage right, and finance right. If you focus on those 3 pillars, you're going to be really successful if you set the parameters for your business or your self-storage or your multifamily, whatever that looks like. And as we continued along, we just continued to use that framework. Now I like to call it buy right with the finance portion. I like to call the second component the operate, and the third component exit. And I think if you're either investing in a business, investing in a multifamily, even in single family homes, you need to focus on that framework to have some type of parameters. Because what I hear from beginning investors, including myself, is I need to find a deal. I've got 10 grand here. Where do I put that 10 grand? That's probably one of the stupidest mistakes I can say, and questions, because I've done it myself. You need to pull back and say, well, what do I know? Where's the foundation? What have I built so far? And what am I trying to accomplish with this $10,000? And then look at that $10,000 and try to find something that you enjoy. Try to find something that you can invest in, but then you need to have that framework or the map. And if you don't, you're going to get lost without it.
For sure. And I'm curious, are you kind of the mindset too, like obviously Alex Hormozi's blown up. He's a big guy. And I've heard him say this, and I think this is actually pretty good too, where if you're not making a decent amount of money, then you shouldn't invest the 10K. You should take that 10K invested in skills, and things that will make you more money. Do you subscribe to that, or do you think someone should actually invest that?
It's funny that you say that. I'm old enough to remember Tony Robbins at his peak. Not that he's not at his peak right now, but he would always say, do I invest the $10,000 and save it, or do I spend it and go to the event? Right? That's what he would say. Well, I mean, how are you going to learn how to make the money unless you learn the skills? I mean, there's a big correlation between being younger and being broke and being older and earning and being able to earn more money. When you're younger, you have less life skills. You know, the smart person learns from their mistakes. The wise person learns from others. You want to be wise in this venture. You want to shorten your learning curve. There's two ways to learn. It's either on the street or in the classroom. That's the reality. Most of us, the vast majority of us, have learned on the street. We've made those mistakes, and it's a great place to learn. But if you continue to learn there, I don't think you're going to go to that next level. You need to find people who are actually doing what you're doing. Success leaves clues, and that's what propelled. I can only speak to myself, guys. That's what propelled my journey. I had enough. It was 2008. I pick up the book by T. Harv Eker, The Secrets of the Millionaire Mind. Your fruits are in your roots. That's the reality. Like, my value was stuck to what I knew. I needed to get into that classroom. I needed to really level up my skills. I was not bringing enough value to the marketplace. And I'm so thankful that I did that, because when I met Jake, I was the one who knew multifamily. Jake was the one who moved down to Knoxville, Tennessee. He was the boots on the ground. Talk about, as they say in Spanish, un casamiento. Casamiento is a marriage. It's like rice and beans. They go together so well. He was in the marketplace. He was the boots on the ground. And I was the dude who could run the business, who could underwrite, who could, to manage the properties. It was a great marriage. But if I didn't have the value and I didn't learn the business, we would have been incompatible. And then when you talk about my third partner, Mike, coming on, well, we provided a tremendous amount of value to him because he was a hedge fund guy. He was trading commodities. He couldn't do real estate. He couldn't get and spend time doing it actively. Well, Jake and I could, but we needed his balance sheet. He needed our skills. We got together there as well. So if you don't take the time to learn what you're trying to accomplish, and I'm not talking about simply just jumping on and asking AI or chat. I mean a real deep dive. I mean spending months, doing the subject. And if it's in the real estate space, it's really joining, in my opinion, mentorship groups, going to events, reading books, starting a podcast. I've been interviewing guys for over 10 years. I mean, I'm not the smartest guy in the world, but after 10 years in interviewing over 500 people, I'm going to learn a little something. So that's the reality. So I can look at that, and this podcast space is part of my education as well, because it's not free. I mean, you do monetize the podcast somewhat, but it does cost a lot of money to put it together. Your time, editing, platforms, reaching out, all of that. So if you want, and you can look at anyone who's successful in life, the vast majority of people who are at the 1% or above, the vast majority of them have coaches, have consultants, have learned from others.
That's incredible.
We started this podcast with the same mentality of, we knew we weren't going to make any money on this, but the main focus was for us to learn and for other people to learn with us. Also, yes, we're documenting our journey with us too, but the biggest takeaway so far from our podcast is we are learning directly from the people who are out here doing this, who can give us direct advice into our own portfolio building. When we started this, we hadn't bought any buildings. I'm not trying to brag on us, but we are learning so much, and people have learned along with us. And it's the connections outside the podcast too, where we've been able to have this platform, learn, and other people are seeing us. They want to invest. They want to help with us. This builds us credibility. I mean, start a podcast. That's huge.
Yeah. I was going to ask you, 10 years is a long time.
Yeah.
So that's incredible. And I'm sure you've probably learned so much from the people you interviewed, like you said, and then you've probably shared, your knowledge with those other people to a bunch of people. So what kind of impact has that had on your business? Have you gotten a bunch of opportunities from it? Have you made a lot of connections, investors? Tell us about 10 years of podcasting. That's awesome.
That's a great question. But Jesse, I'm going to backtrack and, expand upon what you said. Where did you guys first hear me?
Bigger Pockets.
On the podcast.
Yep.
And to answer your question, Graham, all of the opportunities. Now, when a broker connects with us, they can see us online. They can read our books. They can see our YouTube videos. All of a sudden, it is instant credibility. It's interesting because I started the Jake and Gino brand and the podcast because I literally retired from the restaurant, moved to Florida. Jacksonville was too expensive back then, 10 years ago. What a laughable comment that was. But people thought the market was tapped out. So I'm like, Jake, I'm not buying any deals in Jacksonville. Why don't I just start an education company? We wrote a book. We started the podcast. And after about 7 or 8 years, Jake and I were doing the business. It was 2018. We sort of ran out of money. I mean, we had refinanced over $8 million of our portfolio. We had about 700 units at the time. We had done a couple of seller finance deals. we're like, you know what? Everyone's screaming and talking about this syndication space. Why don't we start syndicating deals? And with the education company, we started doing live events, and quickly, I mean, within, a couple months, our investor list went up to like 400 or 500 people. That's from the podcast, and that's from the branding, and that's from the book, and those from the events. And we did 3 syndications. We raised over $10 million. I don't want to say fairly easily, but it was a lot easier than if we didn't have the podcast. And the other thing the podcast does, and the education space did for me, is I really needed to research. I mean, you learn how to do something, then you actually do it, and then hopefully you get the ability to teach it. Because once you teach it, it's amazing how much you learn from your students and from the stuff. I had never done master lease options, but I had done seller financing. So when a student brings a master lease option over to me, I'm actually seeing how they're structuring it, and I'm learning it myself. And then I'm bringing that skill to my investment. And I'm going to tell you, it made Jake and I such better investors. We became really good investors from a rinky-dink little podcast that I don't know how many people heard in the beginning, but it was awesome because we brought on our cost segregation guy. We brought on our accountant. We brought on brokers. We brought on, just all these experts in the space. We're sitting there interviewing them, sharing with them, and we're doing what I call the Napoleon Hill effect. Napoleon Hill was able to interview some of the top minds and top talents in the country in business. Even though he was broke, he wasn't the one with the money. And then all of a sudden, people are positioning him to, let's say, an Edison or a Carnegie or a Schwab. And I think that's what people start doing when they see you've been doing a podcast for a couple of years and you've interviewed T. Harv Eker, you've interviewed Dr. Gary Chapman, you've interviewed Michael Franzese, you've interviewed JP Sears. You've interviewed so many of these big names, Robert Kiyosaki, and they start positioning you to there. I mean, I don't think it's fair, but that's just the reality. That's how the human mind works. And that's the great thing about the podcast. And I think the last thing I'll say is every week Jake gets off it. He's like, I don't really want to do these things. But when he's done with it, he's like, man, I'm so glad we're doing it because it gives you the ability to step outside the box. It gives you the ability to step outside conventional wisdom and see what true leaders are doing, what true entrepreneurs are doing, what people who actually have a freaking portfolio in 2025 versus someone sitting in a classroom and trying to teach you in college, well, this is what theory is and this is what modeling is. No, tell me what's going on right now. Are rents dropping right now? What are you doing with your capital? Why is it so hard to raise money right now? How are you building your brand in 2025? That's what a podcast allows you to do. And if you can take a step back, and I would also say, you had mentioned, we don't want to monetize the podcast. It's going to happen over time. You're going to start at one place. A year from now, you may say to yourself, we've gotten pretty good. Now it's time to look for sponsorships. I think what you need to do when you start the podcast, get really clear on what you want to do. Jake and I weren't clear. We just wanted to start a podcast 10 years ago. It was like, there weren't that many out there. We just wanted to get on and talk about real estate because we love multifamily. Now you can really get on, you can really get into a niche. You can say, hey, I want to invest money. Let me talk to high net worth people. Hey, I just want to help middle-class people get into commercial real estate. I'll start this podcast. Whatever it is you're trying to accomplish, monetization will come at some point. Just get an understanding of who you want to speak to, how to amplify that message, and then start just, either you and a guest talking weekly. I do a show with my son called the Happy Money Podcast. Every week we get on. He's 23 years old. I'm in my 50s. We have disagreements about money, but it's great. It's coming from a younger person's perspective. That podcast serves dads and sons and how they can interact and how they can grow their relationship and how they can have an open, honest relationship. Am I going to monetize that show? Probably. I'm looking for sponsors right now. But the idea is just to start a podcast, but get clear on who you want to serve. And then ultimately, once you start down that road, it's just like any other business. You're going to buy, operate, and then ultimately podcasts get bought and sold every day. Look at that podcast as a business long-term and start implementing and putting in systems as you grow this podcast.
Yeah, that's incredible advice. Yeah. So I take it you've seen it affect you tremendously in your personal life and also business. So like, what are some of the ways that, you said you got direct investors from it, but have you guys sourced any deals from it? And then what's your podcast look like today with you and Jake?
Here's the truth about learning commercial real estate. You can figure it out alone and it be painful, or you can learn from people who have already done it and it be so much less painful. Slava said it best. It's really just watching the people that came before us. They're open, they share how they do it, and we replicate their success. Danny told me this: Commercial Academy is my number one source of off-market deals. I just say I'm looking and deals start coming my way. That's the power of being in the room, knowing the right people and having the right network. Commercial Academy Live, Orlando, January 30th through February 1st, 2026. 3 days to learn from operators who have already done the deals, and it's 3 days to build a network that becomes your advantage. Text Blueprint to 888-653-1199 for an exclusive discount. I am telling all of my friends to come to this that are even on the fence about joining and being in commercial real estate. If you're already in commercial real estate, you 100% have to be there. See you there.
I love that. So Jake and I have a podcast. We have the Jake and Gino podcast, and we got a deal a year ago from a broker. They've been following us forever. I'm like, guys, when you get a deal, just reach out to us, and people will hear us on the podcast. They'll reach out to us. What's great with it is if you're really in the space actively, Jake and I are not syndicating anymore, but if you're in the space actively, how awesome is it to connect with a real estate broker and just interview them and just amplify their message, make the story about them, make them the hero in your podcast. You're just a guide. And then you put that out. You make them feel good. You get reach from them. And then anybody that listens to them, any other broker, mortgage broker, cost segregation person is listening to that podcast, it'll come back to you. So that's the great thing about podcasting. It just catches a wider net. And then obviously as you get better, you start going on other people's podcasts and start sharing tips and stories. What I did with my wife, I like the podcasting space so much that I started a podcast in 2019 with my wife. It's just the Julie and Gino show. We've been married over 20 years, got 6 kids. We've spoken to tons of people about family, about relationships, about communication. We've become certified money coaches. So now all of a sudden we're just speaking to all of these thought leaders in the space, and we really want to help families. We think families with financial intelligence can change the world for the better. And that's what podcasting can do. And a lot of avenues, we don't talk about this stuff. We don't talk about money. We don't talk about investing in school or in other areas. The podcasting space is great to do that. And then once they get to know you, once people who listen to you get to understand and start to have a relationship with you, it's just an easy way to bring people into your community. Because you guys know right now, everyone thinks everything's a scam online. Everyone's an influencer. They don't really know you until they sit down and listen to you and until your message can resonate with them.
100%. Yeah, we one of the first guests that Jesse and I think it was the first guest that me and Jesse interviewed together, was a guy named Rich Summers. You've probably met him or heard of him. He's got basically a boutique hotel syndication company in
California.
San Diego.
Yes.
Yeah. So you know him. You probably know him from his podcast. But we had him on here, and he's like, we're like, what asset class should we focus on? What should be our main focus? And he's like, guys, focus on the content first. He's like, focus on the podcast first, and then everything else you do will get easier, like the deals, the marketing, everything. And it's been so true that so much good has come from it. It's insane.
That's cool. I interviewed Rich a couple of years ago, and he interviewed me as well. Once again, you see the podcast, and what's really incredible about it is the commercial real estate space is not massive. Once you're in it for a couple of years, you start seeing the same names, and that's the interesting thing. I think the older generation may not be online as much, but they're still on LinkedIn. They may not be running their own podcast, but they still listen to podcasts. And that's the reality. And it's one of those things where you need to get over your own fear. What my wife did was when we started our very first podcast, I remember we were doing it and she was I could feel her sweating. That's how nervous she was. But she just said to herself, is anybody listening? You just turn on the camera, you hit record, and it's as if you're just talking to your spouse. And if you think you can't do it by yourself, find somebody to do it with you. I mean, I did it with Jake. We've literally been doing the podcast since 2016. We have not missed 1 week in 10 years? I mean, it holds your partner accountable. You do one every week. You get into a rhythm. And for us, it's been, I probably want to say, maybe the word revolutionary is a little too strong of a word, but I mean, like I said, it just made us really good investors. It really got us clear on our strategy. Because as you speak about it and you talk about it more often and you hear it, and then you start sharing ideas, and then you have guests on that they share their strategies, and you take a little bit from this person and a little bit from that person. Before you know it, it's like, wow, I've learned a lot over the years from this podcast.
100%. I feel like we have a master class. I mean, we've still got a lot to learn, but we've had some incredible people like yourself on the podcast and learned so much. So yeah, I think it's awesome. So you mentioned pivoting a little bit. You mentioned that you're not syndicating anymore. And I know you have your business where you're teaching people about money, you're a certified money coach. So I want to talk about that. And I also want to talk about what you guys are doing in real estate, obviously, too. So we can go
Yes.
either one. You tell me. But what I guess we'll go to real estate. What kind of deals are you and Jake buying right now? If you're not syndicating, you're just using your own capital from multiple successful wins, or how are you guys doing it?
So I think the better question would be, why did you stop syndicating?
Yeah.
And what is one of your biggest KPIs? So if I had to ask that question, I would answer it this way. We like syndication. It's an amazing tool. But one of our biggest metrics is what we call PPU. It's profit per unit. And we want to focus on the profitability of our portfolio. And we also think about our portfolio as being vertically integrated. So we can't add on 3, 4, 5, 6, 700 units a year because we need to add on property managers. We need to add on maintenance techs. So we'd rather focus on the profitability of each deal that we're doing, which means we need to buy less deals. We need to pencil whip less deals. We need to make less deals work. So if we can focus on the profitability of each deal and have more equity in each deal, that works out really well with us. But if you're just starting out, that's not the strategy. When you're starting out, you need to create equity. You need to get in there, do some syndications, do some fix and flips, whatever you need to do. You need to crystallize equity. You need to exit these deals and put that money into the next deal. Now, for us, we were really fortunate up until that point. We refinanced out, like I said, $8 million before we started syndicating. Then we got into the syndication space. We had to hire out. We got somebody to help us with investor relations. And you need to understand this. You're running 2 different businesses, sometimes 3 different businesses. You have a property management company, you have the investment company, and then you have the syndication company. Because syndication is a different ballgame. You're dealing with investors, you're dealing with K1s, you have asset management. It's not what's good for Jake and Gino. Investors don't care about PPU. Investors want to know about IRR. They want to know how much money they're going to get and when they're going to get it back. Well, I want to buy and hold the deal for cost seg, and I want to buy it until the sun out for as long as possible, right? And I'm buying deals that fit that criteria. Well, unless you can explain that to your investors and you tell that to your investors, the vast majority of them were going to say, nah, I'm not really comfortable with that. I want my money back at a certain time. So that's why it didn't fit our model. So we said, you know what, let's put the syndication, on pause. Let's go out and let's see if we can start buying deals with our own capital. Because by the time 2020 hit, we had already exited our first syndication, crystallized that equity, and we were having some nice refinances. So over the last 5 years, we've been able to acquire probably on average 200 units a year, probably between $20 and $25 million in real estate, just from our own capital. Jake, myself, my business partner, Mike. And we've just been able to do that, been able to refinance money into the deals. And to me, it's been very freeing because it's not one of those things where I need to feed the beast. I need to go and put money and find investors. I need to make them happy. It's like we can be very selective right now. The deal that fits our criteria works really well. And it's not to say that if a $60 million deal came tomorrow and it's life-changing and I don't have the money, I'm not going to go out and syndicate a piece of that. I'm very flexible, right? That's the thing. But I think right now, being really clear on what the strategy is for, anybody listening, you need to understand what your goals are. You need to understand where you are in the market cycle. You need to understand the capital that you have. I mean, you need to have the understanding, the experience that you have. Right now, seller financing may work in this market, so you may need less capital. You may be able to do that and not syndicate. So all this understanding is really important. But for us, we just found it to be a lot easier not to deal with investors, not to deal with, having to go out and hunt for deals and trying to force deals to work. We're like, that's not for us. Let's figure it out. And so you come to 2026 right now, the strategy really hasn't changed. We want to become the Chick-fil-A of apartments. We want to have really superior customer service. We want to really stay in that space. And the reason why I say that is, well, 2 or 3 years ago, you guys probably remember RV parks were all the rage and we were thinking of jumping in. But then we said to ourselves, if we jump into this space, are we still going to be the Chick-fil-A of apartments, or do we have to learn how to manage RV parks? It was pulling us away from what our BHAG was, right? So our big, hairy, audacious goal. Yeah. So we said, you know what? Let's not jump into that. Let's sit and figure out how we're going to do deals in multifamily. And that was really, for us, a pivotal moment because we just said to ourselves, let's go all in on multifamily. Let's figure out that vision. And that's, ultimately what worked well for us.
Yeah, I think that's what a lot of people need to hear because in this day and age, especially, it's so easy to get distracted with 1,000 different avenues. And there's 1,000 different ways to make money in commercial real estate because there's so many different ways to get lost with all different asset classes. So what do you tell somebody that's just getting into commercial real estate that was like me 2 years years ago and was like, I like industrial, I like retail, I like RV parks, I like multifamily. How do I get started? How do I find that framework to find where I want to focus and find that big, hairy, audacious goal?
Jesse, it's a great question, because why not data centers? Everyone's talking about data storage.
True.
I don't know. What I would say is, if I was doing this all over again, and I started from the very beginning, I would say, where do you live? Number one, because that may dictate if you want to stay in your market, right? You may want to stay within your market. Then your market may be really good with single family homes. It may be good with industrial. It may even be good with self-storage. Down here in Florida, self-storage is pretty cool because there's no basements. So there's a lot of self-storage down here, and it is needed. So if I'm starting, I'm going to say to myself, the very first thing is, Jesse, why did you get into commercial real estate? What's the goal? Is it like a full-time venture where you want to get into a full-time, or is it a side hustle that ultimately becomes a full-time venture, or is it I just want to place some capital for retirement? You can see there's wildly three different, ways to get into it. If you've got the bucks and you just want to invest into it, maybe you start investing into REITs, real estate investment trusts, or you start going as a limited partner into certain deals with the ability to learn the business of how to buy, operate, and exit, and then ultimately possibly raising money and getting on general partnership teams. If you want to do it full time, you're like I did, understand what niche will serve you best. I'm a pizza guy, flipping pizzas, getting stuck in the kitchen. I don't have time to go fix and flip homes. So that's what happened to me. I'm like, I don't want another job. I already have a little bit of capital, so maybe I can place my capital, and instead of what you said before, making money or getting rich, I want to create wealth long term. That's what my goal was. I didn't need another $10,000, a month, or $20,000 a deal. That wasn't going to change my life dramatically. But what would change my mind is if I bought a deal for $1 million and then I refinanced all that money out and I could buy another deal. That's what for me was like the guiding principle. I want to do this. So fix and flip, wholesaling, it's great if you're getting in because you need the money. As for you're starting out, you need money. You need equity, because in equity is what creates cash flow. If you're disciplined, if you get that equity and you put it into the business. So what I was very fortunate, I would call it fortunate and unfortunate at the same time. I had 5 kids when I started. So I just couldn't, as everyone says, burn the ships. I burned them mentally, but I couldn't leave my restaurant. I needed to feed my family. So what that allowed me to do was work an inordinate amount of hours, but the restaurant was paying for my daily expenses. It was paying for my lifestyle. Everything that I made with the real estate went back into the real estate. And remember, I said I started in 2011. Well, within 3 years, Jake and I have like almost 250 units. Well, within 5 years, we have over 700 units. In 2016, I finally said, I'm going to burn the real estate bridge, ship, whatever you want to call it. I left the restaurant and I went into real estate full time. If I had tried to jump into real estate full time, I think it would have, number one, taken me a lot longer. Number two, I probably would have made a lot of mistakes on the way because I would have been forced to do deals. I would have forced to raise money and to get fees, right? So I was fortunate enough to say, I'm going to stay with my job and I'm going to work with my job. I'm going to learn real estate. I'm going to partner up with somebody. I'm going to start doing deals. And it's interesting. You think you need all of these deals and all of these units. You don't need that much. When you're first starting out, you need to do some really profitable deals and reinvest that profit into the business. At least that's my opinion.
No, that's all great. You've got my wheels turning over here. I'm just sitting here thinking about all this stuff. I'm like, oh man, this is all great advice, and thinking about how we can apply it to our business. I'm curious. So like, I'm gonna ask some like a selfish question, just like you were our coach, right? So we started the podcast about a year and almost a half ago at this point. Yeah. We've bought 7 buildings technically. 4 we bought with, so the company we work with, we're brokers, commercial real estate brokers, and we work under a company that allows us to buy deals with them. So we have a little bit of equity in 4 buildings with them. And then Jesse and I own 3 on our own. And so they're all small industrial buildings, single tenant right now. We've got 1 under contract with our company as well. That's a multi-tenant industrial. And then 1 that we've got under contract personally. We're selling an old residential property and 1031ing into it. And we're kind of at the point where it's starting to make some cash flow for sure. And it's a decent amount. And our goal, because you said, the goal is the most important part. Our goal is definitely cash flow to support our life. Not because we're lazy and we don't want to work, but we want to go off the brokerage hamster wheel where you got to do all this stuff, get a check, and then it goes away. We want the recurring cash flow for our families. I have 3 kids. I'm about to have a 4th in February. So next month, which is insane to say, holy crap. And then Jesse just got married. So yeah, we're after cash flow to support our family. So like, what would be your advice to us? Would it just be take the cash flow we're getting from these properties, which is not much yet, but it'll hopefully compound, and reinvest? Or I'd be curious to hear your thoughts.
Well, I need to clarify one thing. Your wife is having the baby. You're just an innocent bystander. So we have to put that out. Okay?
Yeah, for sure.
They do all the work. We sit there and crap in our pants and hope everything goes well.
100%.
I've been down that road. I would say cash flow pays the bills. Equity gets you out of your job. Ultimately, everyone thinks that you need to start off with cash flow in the beginning. You guys are in a great space because industrial is pretty awesome. There's not a lot of maintenance or management on the asset. I think it's certain areas of the country when you're buying these things, you just need to know what you're buying. Like down here in Florida, if you're buying industrial down here, you don't want to buy buildings that are steel. You rather buy concrete buildings. Let's say you need to know where the location is. You need to make sure that there's great tenants, all of that. But for me, if I'm starting out, I would buy buildings. And you have two classes of buildings. So what I want you both to imagine that you have a conveyor belt. And this was great because there's no right or wrong answer to anybody. Syndication is great. It's one conveyor belt. It's one strategy where you're not going to make cash flow. And I had this big discussion and argument with my son on our show podcast this week. What's an investment versus what's a speculation? And to me, a speculation is an investment where you're not really getting paid. But he's like, Dad, what happens if I buy a deal with the idea of getting paid, but I don't get paid and I lose? I said, well, that's different. Your intention was to make money, right? So the intention is really important when you're investing, the intention and the exit strategy. So for you, I'm going to look at this deal. I may buy a deal that is just cash flowing a little bit, but then I may buy a deal that I may not cash flow at all, but I know in a year or two, if I get the NOI up, I can flip that bad boy out, make a ton of money, and then that money, I repurpose it into another deal that has cash flow. The goal early on is to try to find deals. And the thing is, if you find deals that are massively undervalued and you can bring that NOI up and then you can refinance that property, well, that's what's beautiful about real estate. You bought this asset at a certain price, you put money into it, the asset elevated in value, you've got these benefits, these tax benefits, then you're able to exit. That's when you make money. You don't make money when you buy real estate. I don't care what anybody says. You make money when you exit real estate. I mean, you obviously make it when you buy. You've got cash flow and all. But if you buy a house for $100,000.
Hey guys, it's Graham here. I need to tell you about something coming up in January 2026. While most investors are making New Year's resolutions, a group of serious commercial real estate investors will be doing something different in Orlando. They'll be positioning themselves for the biggest opportunity we've seen in a while. 2026 is when preparation meets opportunity. The market is resetting and creative financing is opening doors that were not open before. And investors with the right education will have their pick of deals in 2026. And that's what's happening at Commercial Academy Live in Orlando, January 30th through February 1st. 3 days with experienced operators who have actually done deals, capital partners looking to deploy money, and a community that becomes your competitive advantage. Are you ready to start 2026 with the momentum? I would not miss this event if I was you. Text Blueprint to 888-653-1199. Again, that's Blueprint to 888-653-1199. This will get you an exclusive discount to the Commercial Academy Live in Orlando. And remember, it only takes one deal, one time to change your life forever.
And then a year, 2 years later, you sell it for $150,000. You made $50,000 in equity. You buy the $100,000 house. How much cash flow are you making a month? $200 a month, $300 a month. You're going to make maybe $4,000 a year, maybe $8,000 a year. You need the cash flow because it's going to pay the bills and put some money in your pocket. But ultimately, depending on where you are, that equity is what's going to make you rich and keep you out of your job. And if you repurpose that equity into another deal and continue to scale up, that's what I see a lot of investors doing. They start out with smaller deals, 5-unit, then an 8-unit, then a 12-unit, and then all of a sudden, and I'll give you one real life example right now. We bought a property back in 2021. We paid $89,000 a unit blended. It was a 24-unit property. There was 6 units on it. We ended up selling these 6 units 2 years ago for $172,000 a unit. 6 units. So from $89,000 to $172,000. Now my son says, well, is that an investment or a speculation? I said, Michael, I bought it as an investment because it was cash flowing day one. The intention wasn't to sell the property. The intention was to buy and hold. It was in a good area, 2-bed townhomes. We liked the unit mix, but somebody came over and paid us ridiculous amount of money. We took that money and bought another deal with it. Now we just closed in a deal last week, 31 units. Literally the same footprint as the properties down the street. These are 6-bed units, 4 beds, four units upstairs that are 2 beds. Same exact thing. We paid $125,000 per unit on this. So you can see how it is. It's like you're trying to run this conveyor belt where you're putting assets on the conveyor belt. They matriculate. You pull the value out. So we paid $170. We sold for $170. Now we bought back the same ones down the street for $125. These are going to rent ultimately out blended at $1,400 per month. So you're seeing how it's working. Like you're trying to extract the value and put it into an asset that is undervalued, bring the value up, extract that equity, whether it's through a sale. Because if we had refinanced those properties when the value was $170 a door, if we had refied a lot of that money out, they wouldn't cash flow. It wouldn't make sense. We'd have to hold it way too long to be able to get all that equity. So our idea was, hey, let's just sell it. We've got another opportunity. But that's what you're trying to do. You're trying to buy these assets at a good price point, add value, and then ultimately in the back end, extract that value and go rinse and repeat. Whereas what most people make mistakes on is they'll buy the asset, they'll sell it or refi it. And if you sell it, you have the tax consequences as well. But even if you do, but then they take that money and that money's sitting in the bank and that money evaporates. That money goes to lifestyle. You can do lifestyle, but wait a few years for lifestyle. Don't kill what Jake and I call your baby money soldiers. You want your baby money soldiers to multiply. You want them to grow. If you're killing them through lifestyle, through personal expenses, you're not going to be able to allow them to multiply and to grow. And you had said that snowball, that cash flow snowball does take a few years. That's why most people, when they get into this business, they have no idea that you can run a really successful cash flowing business that produces profit per unit, but it's going to take a few years and maybe a market cycle to get to that point. And right now, it's great because that market cycle looks like that's where we're headed. We're headed for pricing to drop, and pricing has dropped since 2022. And I think once prices drop, once rents have stabilized and you got interest rates coming down, there's cash flow on the horizon.
Yeah, that's exciting. That's super exciting. No, I love that advice. We're trying to kind of do that right now. So we bought our first one for $250 about a year. When was it? September of 24, I guess. And we leased it to a tenant. That tenant didn't work out. We got a new tenant in there. The new tenant has the option to buy it. He's going to buy it here in a couple months for about 410. So we bought it for 250, sell it for 410 about a year and something later. We didn't want to sell it. Like you said, our thought was just to hold it, but the tenant came along, or this opportunity, our last tenant wasn't paying, and he came along and was like, hey, I really want to buy it. We're like, well, we could take this capital, sell the building, and then hopefully, our goal is we're not going to use it on lifestyle. We're going to go buy another building. Same thing with the duplex me and Jesse bought. The first thing we ever bought together was a duplex here in Durham, and that was 3 years ago at this point, or almost 4 years at this point. We're selling it. It's closing in 3 days, actually. And we have another property under contract we're going to roll that into that's an industrial building. So we're trying to do that as much as possible.
You're not trying. You aren't trying. You are doing that. There's a big difference. See, beliefs and patterns and behaviors and words mean something. You're not trying. You're actually doing it. And even if you haven't done it or accomplished it, that's what you are doing. You have to switch your identity right now. You guys aren't just the commercial real estate broker bros. You're the industrial bros right now. That's what you're doing right now. And that's what gets most people hung up on, like, well, I haven't really done it yet. Well, if you've watched Game of Thrones, when Daenerys gets on the dragon and goes, how do you fly a dragon? Well, you don't know how to fly a dragon until you fly a dragon. It's the same thing. It's the same concept here. You don't know how to buy an industrial park until you buy an industrial park. And what you did was great. You didn't go out and try to buy a massive park. You bought a relatively small park that you can close on. Think big, start small, right? Because behaviors are belief driven. If you believe that you can close in a small park, you're going to do it. But if you put this big vision board that you're going to have to own an industrial park that's $10 million, you're going to be paralyzed. You're not going to know with fear. You're not going to know what actions to take. But starting small and getting that win and then proving the process where you're like, holy crap, I bought something for $250. I sold it for $410. Even if I net $60,000 or $70,000 after everything, holy crap, there's money to be made in this thing. Can you imagine if I add a zero onto that? Then it's like, wow, okay. Yeah. But most people don't get past that because their identity is wrapped up in what they're doing, and they don't see themselves doing that. It is what they're doing. And you guys aren't trying. You guys are actually doing, which is incredible.
Thank you.
Thank you.
Really appreciate that. Seriously. That's something I feel like I've learned. One of the big things I've learned from all our guests and the firm we work at too is really great about this. Like it's cliche and kind of cheesy, but it's so true that like your mindset, starting with your mindset is like really the first step. Like you have to think, you have to believe that you can go out and do these things, and you have to like have that positive attitude of like, we're going to do this versus just like what you said.
It's a little deeper than that. I mean, for me, when I started this money coaching, and I would tell everyone, go to my website, go to barbero360.com. I have a money quiz on there. And it really comes down to the relationship somebody has with money. And what I mean by relationship is, what patterns did you have when you were young? What beliefs, what behaviors did you have? If you were ultimately told that you can't afford it, money doesn't grow on trees, it takes money to make money, a lot of these things were ingrained in my psyche early on. And why is it that for 20 freaking years, I only had one restaurant for 20 years? And within 5 years, Jake and I had 700 plus apartment units. I mean, it's not rocket science. I mean, I got a little bit better, but I scaled a company and I started learning other skills. I started challenging my beliefs. It does take money to make money, but I can use seller financing. I can use syndication. I can refi money. I mean, these are things that if I had my limiting belief and I stuck to that limiting belief, I wouldn't be here right now. So we need to go back. We need to challenge the behaviors and the beliefs that we have and say, is it true? And obviously, if you really take a look deep down inside, guys, there are so many morons out there on the planet that are rich, that are really wealthy. And you say, how the hell did they do it? And why can't I do it? I have something going on inside of me that's limiting my belief to be able to do this. And if I was taught at a young age that rich people are evil and they're greedy, and listen, I'm not here to tell you if it's true or not. That's up to you. But if you do believe that and you want to become ultimately really successful in commercial real estate and you start making money, you can also guess what's going to happen to that money sooner or later. You're going to make a bad deal unconsciously, or you're going to feel really crappy because on the one hand, you're successful. You've got a ton of money. But on the other hand, successful people, rich people, mean, evil, greedy, it's not going to line up. You're going to feel incongruent. So what's going to happen is you're going to ultimately sort of give up that money and lose that money unconsciously some way. So you need to decide. You need to do some work. You need to go back into your past, figure out what those are. Are they holding you back? Come to the present, understand what you're trying to accomplish. Wow, I'm in industrial right now. I'm doing my brokerage thing. I've got this podcast, and this podcast is going to help me get leads. This podcast is going to help me learn the business more. This podcast is going to help me build my brand. And from there, I'm going to start doing the real estate, let my commissions go to pay my lifestyle, and let me roll some commissions in. Let me start building this little business on the side, which will ultimately become a big business because I'm going to learn how to buy, operate, and exit these deals. And I'm going to rinse and repeat. And that's what I'm going to do. So I've got multiple conveyor belts. I've got one where I've got my job on there. I've got one where I'm buying these little industrial parks to buy and hold cash flow. And I've got one where I'm buying these things and I'm selling these things. And hey, maybe I might even have one where I'm raising money from people and syndicating. I've got multiple strategies going on, and some strategies are going to be really good in one market cycle and some are going to be really good in another market cycle, but they all have different, I guess, goals and objectives to them. And once you become clear on that and you understand that holistically for yourself, man, that is power. All of a sudden you're like, I've got options here. I don't have to just do the same thing that everyone else is doing. I can buy this deal on seller financing. I can raise money for this deal, and this deal, even though it's a $250,000 deal, I'm going to hold all the equity myself. And I just made $100,000 in equity in 6 months. How cool is that? That $100,000 I'm going to put in and go buy another deal.
Yeah, I think that's huge. I think you got to have those different tools when you're going after even one asset class, because we've used them. We never probably would have went out and made a seller finance offer if someone didn't tell us about it, learn how to do it, offer these terms, all that stuff that you learn from mentors and stuff like that. Gino, I was wondering if you could expand a little bit more on why you keep talking about real estate as a business. I feel like Graham and I are trying to get there a little bit more. You talked about systems and stuff like that. Can you expand a little bit more on why you talk so much about real estate being a business and not just real estate?
That's an interesting question because most people don't have that correlation. And when I started out, I didn't either. Jake and I like to say that business is three things. Real estate is three things. It's people, it's systems, and it's culture. I always go back to those days of the restaurant. I had no core values. I had no culture. I had no mission statement. I couldn't scale. I had a job. I didn't have a business. If I wasn't there, if my brother wasn't there or my mom wasn't there, shit was going to fall apart. That's the reality. It's not a business. It's a job. And that's okay. But if you're getting into real estate and you want to start buying deals, And if you don't understand how to scale or how to start implementing some type of systems or have a roadmap, you're going to become a mom and pop who's burned out, a mom and pop who's going to hate real estate. And they're going to sell to Jesse or to Graham, or they're going to sell to Jake and Gino as a motivated seller. That's the reality. When I talk about business, do you have a website? Do you have any kind of marketing? Do you have any kind of CRM? A lot of investors don't. A lot of business owners in real estate, they just don't have these tools. They think of it from one perspective. Well, you need to manage this asset. That's the operations aspect of it. That's the business aspect of it. But you also need to asset manage this thing. So it's important that you look at business and real estate as that scalable business. And as you start adding on units, you're going to start stressing the whole business itself. You're going to have to start hiring people. Well, businesses hire people. You have property managers, you have maintenance techs, we have regionals, we have VAs, virtual assistants, you have vendors, all of these different people that you're hiring. It's part of business. I mean, I hope I made that clear that if you're not doing it, Jesse, it's important. Somebody has to be doing it. And I'm not saying that you have to do it yourself, but your team, if you're growing, and once again, coming back to the goals, if you're just looking to buy a couple of deals, you could probably squeak along and be okay. But as you're adding on industrial parks, as you're going into different markets, as you're hiring different vendors, as you're trying to create some type of investors, you need to have some type of systems. I mean, one system's simple, what we call the cadence of accountability. When we first started, Jake and I would get on a call every day ourselves, maybe 4 or 5 times. But as you start hiring people, are you having daily calls? Are you having end of day calls? Are you having weekly calls with your team members? Are you having quarterly priorities? Whether you're, doing it part-time, full-time, you're a property manager, you're an asset manager, these people all have to speak. There has to be some type of rhythm within your business. And if you don't have that in your real estate business, guess what? You're going to become motivated. You're going to become stressed out. You're going to become overwhelmed, and you don't know why. And I can tell you why. I've been there and I've done that. We used to call ourselves the I'm a guys. I'm going to do this. I'm going to do that. I was cutting the grass. I was doing tile. After a while, IMA needs to understand that's not the true value in the business. Saving some expenses. The true value in the business is expanding the business, creating more equity in the business. And once you understand that, what got you to that point is not what's going to get you to the next point. And just understanding that, having that revelation at 100 units, we're like, wow, okay, we have to stop being the IMA guys. How do we go from the IMA guys to guys who hire people who can help us in this business?
That's so good.
Yeah.
It makes me think a lot about the book, which I'm sure you read, Who Not How. Trying to implement that more this year, just having more people who are going to do it for us or help us do it, or who can't accomplish what we're going after versus just us doing everything.
Mm-hmm. I've got another good book that I recommend. I'm just reading it right now. A book called Buy Then Build. You're buying something and then you're building it. Because what you're ultimately trying to do with this portfolio, with whatever you have, you may never sell the portfolio, but you want to be able to build it. Whereas one day you can just take over the reins. You maybe will want to give it to a property management company. You maybe will want to sell part of it to a partner. You maybe will want to refinance the deal. So as you're building your systems, as you're building it, just document. Pretend as if you have everything in one place. Allow it to run, whether it's a property log, whether it's a takeover sheet, whether it's a unit condition sheet, whatever that is. Have all of those systems in play so other people can utilize it. And as you're building it, your business, your portfolio becomes so much more valuable.
That's incredible. So build really good systems so that eventually you can basically choose what you want to do, whether it's you yourself operating a passive to somebody else or selling it. I mean, it's like Rob Dyrdek has blown up. Obviously, I love Rob Dyrdek.
Yes.
But his podcast, he talks about start with the end in mind.
Yes.
So it's kind of what you're talking about.
And that's for everything in life. I mean, take it from the family perspective. If you're trying to raise a family and you're saying to yourself, the end in life, end in mind is, I want my kids to really love me. I want my kids to get along. I want my kids to have part of my legacy, because I love from the book of Proverbs, a good man leaves his children's children an inheritance. And that's my guiding principle. If that's what I want to look at the end of life, I'm not only talking about an inheritance of money, I'm talking about an inheritance of human capital and intellectual capital, along with financial capital. Well, what do I have to do today to start looking at that with the end in mind? So that permeates all areas of your life, including your real estate. But what ends up happening as you get deeper down the road, you amass certain skills like I never would have thought we would not have syndicated. There's nothing wrong with changing, but I think ultimately the goal for us was always owning multifamily, having a really cool business in multifamily that if, one day, 10 years from now, we have $2 billion in assets under management, we've built this thing that we can sell this. There's a lot of intrinsic value in that business. So thinking with the end in mind is really important. And then coming back and reverse engineering that, it's very difficult for a lot of people to do because they can't think out 30 or 40 years, but just get a general idea of what your life, wants to look like. And as far as you having your family, you're running around and you're doing all this and you're building your business. Did you once ever stop and ask your kids, well, I'm doing it for my kids? All the entrepreneurs are always saying that. Have you ever stopped and asked your kids, is that what they want? I just a question to throw out to people. It may be what you want unconsciously, and you're saying, well, it may be what they want. But if you're building that vision 30 or 40 years down the road, they need to see you more. You need to be part of their business more. Don't use the excuse of I'm building it for them. So then when it's built, they don't even want it anymore. They don't even know who you are. So make sure that you get really clear on that picture at the end and reverse engineer it and put a lot of those principles that you want at the end. Start living those principles today.
Yeah, that's a great point. That's such a good point because a lot of people, a lot of the deals we pick up, or not we, but brokerage or something we buy,
absolutely,
are from family members who are like, I don't want this. My parents pass it to me. I want to just sell it.
Yes. And that's part of the legacy. Legacy is important. Legacy is not something you leave. Bill High, the author who wrote the book with David Green, who owns Hobby Lobby, he's written several books on legacy. He says legacy is something you set in motion. It's not something you leave. You start your legacy today. I mean, even though your kids may not want to own the business, teach them the business. Teach them the business of real estate. We've been talking about the business of real estate. Now, you're not teaching your kids to do deals. You're teaching them the business of real estate. Market cycles, exit strategies, buying, financing. If they can understand that, when they inherit the property, they may not want the property, but they can go to you two and have an intelligent conversation and not get ripped off, or have a property management company run the deal for them, right? That's a great place to leave your children, is leave them, but then at the same time, you have to find ways not to force it down their throat, but try to make them understand, hey, this is part of the legacy. This is part of something that we've built. And that's why I'm building the company with my family, the Barbero360 company. I'm teaching them business through building a business with the family. And they have all these different skills and these different geniuses and these different passions. And we're bringing them together into this Barbero company so that in the next 10 years, the real estate's going to be like, oh, okay, income, expenses, NOI, what's the cash flow? I get it. I don't want to have this business. I can sell this business.
That's awesome.
Yeah.
So you're talking about your business you're building with your family, and then you got your real estate business, you got the podcast, you got all these different types of things. Something that Jesse and me, struggle with is where do we put our attention? Because we've got a brokerage business, we've got the investing stuff we're doing, we've got the podcast. We've tried to dial it down or dial it in at least.
Those three are great.
Yeah.
Those three are excellent. Yeah, like you said, once again, start with the end in mind. I would recommend a book by Cameron Herold called Vivid Vision. Mm-hmm. And what you two should do is in the next 3 years, see where you want to be in the next 3 years. He talks about company, culture, metrics. He talks about core values in there. He talks about the content you're going to create. Get a real vivid vision of it. And maybe you do one for the next 12 months, and then maybe you do one for 3 years. And be really crystal clear on it. How many subscribers you want to have, how many downloads you want to have, how many deals you want to be looked at. All of that. Get really clear on that. And I think the three things that you guys have focused on, that's going to really propel you because they're sort of interconnected. It's sort of like multiple streams of revenue where you have your main business, but then you have the podcast, which is feeding the business. And then you have the industrial and your deals, which is feeding the business. So they're sort of all interrelated. Now, if you say to me, I want to go out and build, buy a restaurant, I would say, guys, that's not part of the vision of what you're trying to accomplish. So if you're focusing on those three things, that's incredible. That's great.
That's awesome. I've read that book. That's really good. I read it towards the end of last year, and I wrote it out. Yeah. So I think that's awesome. I guess what I was going to ask you too is how do you handle all these different things going on at one time? And then also, how do you spend your time now? Is it mostly on your new business, or is it still on the real estate stuff? Or
well, what I'm doing right now is basically I'm not teaching the education on the real estate space anymore. I sold that company last year, but I'm still creating content for multifamily, still creating content on how to with business skills. I'm focusing on broker relations, deals. So that's what my thing. I'm more onto acquisitions right now, and I'm more onto the business of building the Barbero360 company. We do a lot of podcasts. We're going through the same thing that you're going through right now. We're going through the vision of the company. We're going through the core values of the company. We're going through the business offerings. We're trying to ultimately dial in where in the marketplace we can solve a problem. And I think in the marketplace, the problem is that we have entrepreneurs who are building all this stuff, but they don't understand what legacy is. They don't understand that there's more to legacy than just the financial. I call it the three pillars. I call it the family and the faith is important. The values. It's important. We really need to dial that in for what that looks like for the next generation. The financial component is what most of us focus on. And the third one is the connections or the network. That's really the family, and how does that look like with your family? If you can focus on that, and how can my company help entrepreneurs solve that problem? That's a big problem, because when I speak at a lot of events, the first question is, I don't want to have spoiled kids. I don't want to have kids who just don't. I'm just handing it to them. Well, if you let the kids grow up within the business and let them be part of it, dude, that's powerful. They're not going to become spoiled and entitled. They're mirroring you. I mean, you're basically projecting your stuff onto them. If you realize that, and you can be intentional about it, and you share it with them without being overbearing, and just show them, the goodness in business and the goodness. I'll give you a quick example. My daughter is 26 years old. She's a missionary. She's into art. She's into things that I would not be into. I'm not going to lie to you. But it's incredible that she's using all those talents, and now she has a business mindset where she understands business, and she's like, yeah, I'm an entrepreneur. I said, yeah, Gabriella. I said, missionaries, what do? They go out there and they raise money to proclaim the word of Jesus. That's what you're doing. So you're an entrepreneur. You're a salesperson. You're selling an idea, but you're giving people the opportunity. It's just a mindset. That's all it really is. And for her to understand that, she's learned that through me. She's learned that whole relationship with money through me. It's not money is going to make you evil. Money is going to be able to create impact. Yeah. Money is going to create real opportunity. Money is going to create value. And money is just a result. The more people you can influence, the more money that you can raise. That's the effect. That's what's going on right now. So for her to understand that, I'm just trying to raise kids who can make decisions and who can be entrepreneurial.
That's awesome. Yeah, that's awesome.
That's super cool.
You've mentioned, you mentioned your faith several times in the podcast. So I'm curious, like, how has your faith shaped how you do business? Because that's something also me and Jesse try to keep in mind as we're doing this stuff. We're also believers, and that's like the first. Obviously, our first core priority is that. Second, for me, is family. Then it's business after that. But how do you operate your business? With that, keeping that in mind?
It was very difficult for me a couple of years ago when I read David Green's book, the Hobby Lobby book. He came to the realization that he doesn't really own anything. It's all God's. And that was really hard for me to swallow, because it's like, I'm buying all this stuff, and it's the ego and it's the pride, So but ultimately it's really true. I'm just a steward of this stuff. And that's what it comes down to. But I have to be a really good steward, because there are a lot of people out there that I'm helping with this money. I mean, my extended family, my children, the church. There's a lot of people that I'm helping with this. And I think God gave me the wisdom and the understanding of how to make money and how to really be a steward of it. And that's what I think, for me, creating the core values is important. What are your core values? How are you going to live by them? One of them that I put on the sheet that we're going to go over on Saturday with the family is, I want to be servant leadership. The business is going to be for profit, obviously, but if we can help people and I can give people some of my time, like on this podcast, I want to be able to do that and not monetize. That's fine. So I think when you're thinking from that perspective, what does the business look like? Well, what are you trying to accomplish with the business? And the reason why I'm doing this business, and it's not real estate, it's because I think family is so important. I mean, you look at the Holy Family. I mean, the Feast of the Families was this past Sunday. I mean, how incredible that is. I mean, like, you can see what happens when we have a breakdown of the family. All the shit shows that's going on right now, it's because of the dissolution of the family. That's the reality. And if I can shed some light to it, and I can be an example, and people can say, I want that, how awesome is that? Am I not glorifying the kingdom? I mean, that's what I think that's what my mission is here. I've been trying to figure that out. Doing deals is great. Making money is great. But what do you do with that money? How do you make money, and how do you make impact? I think that's what we, as all business owners, should have on our mind. I want people to make as much money as they possibly can. It's important, because we need to be financially independent. Because if you're not, then you really truly can't go out there and help others if you can't even help yourself. That doesn't mean to say that, hey, you got a job that you still can't help. But man, when your bills are paid and you can sit down and you can create a family company, and you don't have to monetize it day one, and you can do podcasts, and you can do do all this stuff where there's not a burning need to make money, although you have to make money. And that's the thing. Profit is the fuel. It's not the destination. That's what's important. I need to be able to make money in this business to be able to fuel it, but that's not why I'm doing this business. And I think that's people who do have faith. I think that's how they should look at their business. And that's how I look at my business. And then ultimately being the steward and then teaching our kids to be stewards and then teaching their kids to be stewards, because these patterns, when we were talking about the patterns of childhood and the patterns of these beliefs that we have, they're intergenerational. They're carried over from one generation to the next. And if we can break these negative patterns and have people start creating new positive patterns, you're not only affecting this generation, you're affecting the next generation.
That's incredible. That's incredible. Yeah, you just dropped some awesome info. Like, that was just great.
Yeah. So we talked about stewardship and stuff led by church a few weeks ago, and they take very specific time to talk about it, because how important it is to make sure that, we check our ego at the door. It's not ours, it's the Lord's. And it honestly is a little bit freeing in and of itself, saying, okay, God's going to guide my steps through these things. And I think that's super cool. We appreciate you sharing that. I did have another separate question too. You understand the power of working with people and who, not how, and stuff like that. But I want to talk specifically about you and Jake and what that partnership has looked like over the years, how it's, grown, how it's developed, and kind of just selfishly just ask, how can Graham and I be better partners to each other?
Well, the first thing is, when you're setting up a partnership, it's all about values. It's values-based decision-making. If Graham's out there rocking the Lambos and wants to flip these deals, and you're out there saying, you know what, I really want to hold these long term. I really don't need the flash. Are you going to be good partners? Maybe. I'm not saying you are, you aren't. All I know what worked for me and Jake is we both were family guys. We both worked really hard. We were both very structured. We both had radical accountability to each other. Like, there's no, oh, I'm too tired. Oh, Jake, you need a doc at 12 o'clock for me to sign? Oh, Jake, it's December 19th, 2024. I need to fly down to Knoxville for the day because I have to sign docs or else this deal's not going to close. Sure, I'll do it. I don't want to do it, but I'll do it. I mean, how many people do you know are going to fly on a plane 3 days before Christmas and just sign docs for a deal? Most people won't. But that's what makes a successful partnership, is not letting your partner down, having clear expectations. I think aligning yourself with the vision that you both want to accomplish. And that's what happened with that RV park. One of us may have said, hey, let's just take a risk. Let's go for it. And that would have been fine. We could have gone on our separate ways. But then all of a sudden the partnership gets strained if you're going to do the deal and stay together, because it's like, well, I don't really want that. That's not my goal. Ultimately, my goal is to build this business, to stay in multifamily. So being radically accountable, having relentless execution amongst the partnership is so important. And then raising the standards. That's why the podcast comes in. Every week, we raise our standards because we're getting on with somebody who's incredible. If you can put those three elements and then have that values-based decision-making where you're making, and this should be for your own life as well. If you're making decisions on your life, what does that look like? Are you making decisions based on, what your values are? And for me, that's why I got out of the restaurant ultimately. It didn't align with my values after a while. I had to work on the weekends. I had to work on the holidays. I was missing important days with the family. And I didn't feel right. And I don't know why. I mean, there was other reasons, but that's, I think, one of the main reasons when I look back at it unconsciously. If you're living that kind of life where you're doing a job where you hate, or you're just doing something where you don't, and it doesn't feel right, you're probably going against what you value or what you believe. And then ultimately it's going to catch up with you. And that's why I think if you can get really clear on what those are, and then you go out and find a partner that has the same or similar values and has the similar goals, and then you lay out the expectations. Hey, Jake, you're going to property manage. I'm going to asset manage. I'm going to do the books. I'm going to underwrite, whatever that looks like. If you can have those set in place, then more than likely you'll probably have chances of having a much better partnership.
I think that's really great advice. I think that's something that Graham actually mentioned to me pretty early on was, I feel like we have a lot of the similar values, and I think that's what's helped us have a great foundation of a partnership. Obviously there's always rooms to improve. It's not always perfect. We're human. We're sinful. We're going to let each other down at times, and it's okay, but keep fighting. And I like what you said about, I can't remember the exact word you said, but intense accountability, I think.
Radical accountability. And Jesse, I'll say one thing. I think we're so afraid to argue or to have what's the word when you conflict.
Yeah.
And I think arguing or having conflict is not a bad thing. I mean, like, I think it's what partners need sometimes, because I look at something one way and he may look at something a different way, and having perspective and having that stimulus and response, as Stephen Covey says, is important, because most people are triggered nowadays and they don't know how to like, take their emotional regulation into consideration. It's like, okay, I got triggered, but what happens? You can get triggered and just wait to respond. And I think our partnership is great in the fact that sometimes Jake sees something that I wasn't even looking at, and then I see something that he wasn't looking at. And then sometimes we may argue about a deal or about a price point or about a strategy. There's nothing wrong with that. I think you need to be open and honest with the relationship and with the partnership and say, hey, we're going to have some rough conversations. That's part of it. But I think it's a lot more challenging doing a business by yourself, because being alone, being an entrepreneur, can be scary. Yeah, I can talk to my wife, but she has no idea how it feels when payroll is coming around. There's no money in the bank. She has no idea. There's only one other person right now in my life that knows that feeling, and it's my business partner. And we've gone through it together. And having somebody there to be able to talk about a crappy day or to be able to share something, to me, it's invaluable.
Yeah, I think that's a good point about the conflict. I think we work so alongside with someone so much that you're eventually going to have it anyways. But I think that's where the growth tends to happen. But yeah.
Well, yeah, that's awesome. This has been incredible. Coming up on a little over an hour, so I'm sure you probably got lots of other things you got to do today. But we truly appreciate your time. It's been an awesome episode. I think your passion comes through very clear, and I think the people in the audience will hear that too. Like, we get a lot of awesome guests on here, but every once in a while we get somebody who's real fired up. You can tell they know what they're talking about. They're super passionate about what they're talking about. And I think this was definitely one of those episodes. It was one of my favorite episodes we've done in a long time. So really appreciate you coming on.
I'll leave you with this, guys. I think this is important. Smart people know the answers to all the questions. Wise people know what questions to ask. I think if you can go life and use that for life, I think that'll really guide and help you, because I've just got a lot of experience in real estate. It's not like I know all the answers, and I'm still learning every day. That's the cool thing about life and the cool thing about business, because things are always changing. Try not to always look for the right answers. Try to look for the right questions. And if you can ask the right questions, the answers will pop up.
That's awesome. That's awesome. Well, if people want to reach out to you and connect with you, what's the best place for them to do it?
Barbero360.com. You can go to jakeandgino.com. If you want to reach out to me by email, it's gino@jakeandgino.com. And I've got, I'll give you a free PDF book of Happy Money, Happy Family, Happy Legacy.
Awesome. Well, thank you, Gino. We seriously appreciate it. And if you guys listen to this, definitely go check out all Gino's websites, shoot him an email, get that book. I definitely want to get that book, especially with where I'm at in my very young family. So it sounds like it's something I should read. And I'm excited. So thank you so much, and we will see you guys in the next one.